Well, forget a slowdown in China. Could we be on the verge of a slowdown right here? Goldman Sachs cutting its U.S. growth forecast for the first time for the first half of 2019 to Fairfield Strategies founder Kate Stockton on whether or not we could see a slowdown in the markets in 2019. Katie, I've been bringing this up all morning because I like Ken Fisher. He's a very smart guy. I like him a lot. He thinks, he came out with a piece in USA Today suggesting that we could have a 15 to 20% increase, a pop in the stock market in 2019, going against what Goldman Sachs is saying. What do you say?
Well, you really can't rule out anything, of course, but if you look at the market over the past couple of months, it does seem to be anticipating some kind of slowdown, doesn't it? We have a corrective phase that really doesn't seem to have matured yet. We saw a lot of breakdowns among the major indices below important support levels, and that does heighten risk as we go into Q1 of the new year. It is somewhat concerning longer term, and yet we really just want to react to the intermediate term gauges that I track as a technical analyst, things like momentum and overbought, oversold readings.
Well, let's get to that, because is it just a matter that that the markets were overbought, that we were all too optimistic? Is that why markets are correcting now? Or is there something more fundamental about what Gary was suggesting? The world economy slowed down and that might affect our GDP.
Well, from my perspective, the corrective phase was largely driven by sentiment. Market sentiment got very overly greedy or over exuberant at late summer, so August into September. And usually that occurs with a lead time to a corrective phase, and that's indeed what we saw. So that to me was the biggest risk to the market. But then, of course, from there it becomes a momentum issue. We saw the market stick in the mud in October and retest, and ultimately failed and broke down. And we need to be respectful of that. Listen to the market. Let it tell us, how to position.
It's good that you have an ear for the market. Let me just ask finally, though, it seems that greed has turned into fear in the market, doesn't it?
It definitely has, and it's amazing how that pendulum swung from extreme greed to now extreme fear in the marketplace. And that can be healthy, and it does support the relief rally that's already underway, in my opinion. I do expect near-term upside follow-through for the major indices. S&P 500, for one, has a good deal of upside, even to its 50-day moving average. So it creates a little bit of a vacuum to the upside in the near term and should allow us a better selling opportunity in the stocks that have also broken down.
Let's leave on a positive note. I like that. Katie Stockton, good to see you. Happy New Year to you, Katie.